Tech stocks got rocked yesterday, specifically AI stocks. In fact, Nvidia suffered the worst single day for market cap loss in history, almost $600 billion. Now, that decline is more than double the market cap of Coca-Cola and Chevron, exceeds the market value of both Oracle and Netflix. So these are big numbers we're talking about. Now, I told you early Saturday morning that this was coming. I said I expect a sell-off next week on anything AI related. The internet's convinced that China built an LLM for 97% less than anyone else, and data centers will cease to exist, and we won't have any more build out. Now, we'll talk more about the facts and what we know as we go through the video, and I want to be as neutral as possible and give you both the bear and the bull case. So on January 21st, we had the announcement of Stargate. Now, this is going to be with OpenAI, it's going to be with Oracle, SoftBank, as well as MGX. And the Stargate project announced, this is a new company, intends to invest $500 billion over the next 4 years, building out new AI infrastructure. And we just released a video on Friday afternoon breaking down the winners, the stocks that benefit the most from projects like Stargate. So on January 26th, DeepSeek said training for one of its latest models cost $5.6 million compared to $100 million and $1 billion range provided by AI developer Anthropic when building a model. So DeepSeek R1 is AI's Sputnik moment. This is open source, no cost. By comparison, OpenAI charges $200 a month. And the performance data that we've seen has been really strong. So if a top-end model costs millions of dollars, not hundreds of millions or billions of dollars, and an API can be offered at 27 times less than what's being sold at OpenAI, the massive CapEx expense over the past 2 years may have been wasted. Now, over the last 2 years, a lot of these tech stocks have ripped to crazy levels. And a catalyst like this could drive the AI bull market the other direction. It could even result in a greater market crash. Now, one of the first things I want to point out is if this only costs $5.5 million or $6 million, why is China spending $137 billion to support its AI industry over the next 5 years? People make comments like, oh, because they want to create their own Nvidia. Well, why do they want to create their own Nvidia if they can put together DeepSeek with 5 paper clips and a handful of blueberries? This should be an eye-opener right here off the bat. And this is directly from DeepSeek. The personal information we collect from you may be stored on a server located outside of the country where you live. We store the information we collect in secure servers located in the People's Republic of China. In addition, we automatically collect certain information from you when you use the services, including internet, IP address, unique identifiers, cookies. We collect certain device and network information, basically a keylogger here. Everything that you put in there, they're going to trace it, they're going to track it. Let's think about this for 1 second, and let's really put some thought into it. So we want to ban TikTok because TikTok is collecting our data and sending it back to China. And even though we know that Nvidia GPUs were used to create DeepSeek, AMD on the 24th of January comes out and says they're excited to share that AMD has integrated the new DeepSeek version 3 model on their new GPUs designed for peak performance. Special thanks to DeepSeek for the close collaboration. Now, you're telling me that we're going to ban TikTok, but we're going to allow this to happen? DeepSeek is a much larger threat than TikTok, so don't be surprised if you see a ban coming very soon. Another thing to note here, this is the CEO from Scale AI. Now, when he first came out, a lot of people dismissed this like, oh, well, he's just saying that because it's a competitor and so on. But you'll notice that Elon Musk replied and said, obviously, to the comment about DeepSeek having about 50,000 Nvidia H100s. And they can't talk about these because of the US export controls that are in place. And I've been trying to keep you up to date with this both in Discord as well as on X, but it's important to note that DeepSeek, even though we just heard that they have 50,000 H100s, which could be roughly 500 million to closer to $1.5 billion and Nvidia GPUs that he's talking about. And what they told us is they used Nvidia H800s. Now, at the end of the day, this is still an LLM, even though they don't call themselves an LLM. It's really an LLM, it's a chatbot. And this is not the end game when you think of AI. So do we have a more efficient chatbot, a LLM, a large language model? I think the answer is probably yes. Did it only cost $5.5 million? I think the answer is probably no. But is it less expensive? Yes. So what does that look like for Nvidia? The more you dig, the more interesting this gets. Now, DeepSeek was founded by a Chinese hedge fund called Highflyer. Now, the rumor, and this is just a rumor, but the rumor is that this hedge fund went short on Nvidia, then released a report saying DeepSeek cost less than $6 million. And this is in Discord. I've tried to keep you guys up to speed here as best I possibly can. There's a ton of information. But Bernstein agrees that that $5 million number is bogus. So their title was US Semiconductors. Is DeepSeek doomsday for AI buildouts? We don't think so. Also important to note that on Monday, DeepSeek was hit with a large-scale cyber attack and limited registrations. Nvidia also came out with a statement and said that AI firm DeepSeek advances show the usefulness of its chips for the Chinese market. DeepSeek's work illustrated how new models can be created using that technique, leveraging widely available models and compute that's fully export compliant. So talking about how they're not supposed to get the H100 chips, yet still did this on the older models. Nvidia also said in this statement yesterday that Inference requires significant numbers of Nvidia GPUs and high-performance networking. More commentary here saying, while DeepSeek is no doubt impressive, we're going to caution against reading too much into R1's debut. Even if that's the smallest possible version while maintaining its intelligence, the already distilled version, you'll still want to use multiple real-world applications simultaneously. You wouldn't want to choose between using it for improving cyber capabilities, helping with homework, or solving cancer. You'd want to do all these things. This requires running many copies in parallel, generating hundreds of thousands of attempts at solving different problems before selecting the best solution. To make a human AI analogy, consider Einstein or John von Neumann as the smallest possible person you could fit into the human brain. You would still want more of them. You'd want more copies. That's basically what inference compute or test time compute is. Copying the smart thing. It's better to have an hour of Einstein's time than a minute, and I don't see why that wouldn't be true for AI. Did DeepSeek really build OpenAI for $5 million? Of course not. Did DeepSeek find a more efficient processing model for AI? Maybe, but you can't count on the incumbents to adopt any new technology found. This would only make the AI opportunity bigger in the future. This is talking about adoption, saying that if this is true, all it does is tell you that AI is going to be adopted. The acceleration is going to happen more quickly on AI. So DeepSeek's rise puts into question whether the current pace of CapEx spend technology upgrades is necessary. Commentary from US hyperscalers will be key this week to see if they remain aggressive on AI spend. They will likely stress the need for greater computing power as we shift towards agentic AI and physical AI. And this is what we've been talking about on the channel, referring to autonomous AI agents that require little human intervention for routine tasks, as well as robotics and self-driving cars, autonomous vehicles. So like I've been saying, LLMs are not the end game. They are a commodity. DeepSeek simply proves that. The next phase is agentic AI. Even Intel's former CEO jumped in. He said that it stands to reason that AI will grow even more and that the market's gotten this way wrong. So DeepSeek is an open source large language model that relies on what's known as inference time computing. They activate only the most relevant portions for their model for each query, and that saves money and computation power. Dan Ives says no US Global 2000 is going to use a Chinese startup DeepSeek to launch their AI infrastructure and use cases. At the end of the day, there's only one chip company in the world launching autonomous, robotics, and broader AI use cases, and that is Nvidia. It's one thing to train the large language model for less money, but accommodating the huge demand for the consumption of AI technology is going to require massive amounts of infrastructure. DeepSeek is an excellent AI advancement and perfect example of test time scaling. We now have 3 scaling laws: pre-training, post-training, which continue, and new test time scaling. On a CNBC interview, Tom Lee said that this is the worst market overreaction since 2020 pandemic outbreak. What you need to think about here, guys, is the next phase of AI and really thinking about AGI, so artificial general intelligence. And this gets into Jevons paradox. And you can see the cost decreases by half, the demand increases by more than half. This is going to accelerate adoption for AI. So efficiency gains, lower costs, increased use. You can pause your screen and read this if you want, or look it up on Wikipedia. But it highlights the importance of considering behavioral and economic responses when designing policies intended to conserve resources. And what this is really saying is that you're going to need actually more resources and not less. Sam Altman said that DeepSeek is an impressive model, particularly around what they're able to deliver for the price. He says that OpenAI will obviously deliver much better models. The world is going to want to use a lot of AI and really be quite amazed by the next gen models coming. We look forward to bringing you all AGI and beyond. When you think about Stargate, that's not $500 billion just to build out OpenAI chatbots and LLMs. We're thinking about agentic AI and AGI, and something you got to be careful with headlines. As an investor, you always want to do your own homework and cut through the manipulated headlines and the BS. You know, what they're saying here is true, but there's more to the story. Nvidia called DeepSeek's R1 model an excellent AI advancement, and they do say that, but at the end of the statement, it says inference requires significant numbers of Nvidia GPUs and high-performance networking. A major misunderstanding about AI infrastructure investments. Much of these billions are going into infrastructure for inference, not training. Running AI assistant services for billions of people requires a lot of compute. Once you put video understanding, reasoning, large-scale memory and other capabilities into AI systems, inference costs are going to increase, not decrease. So think of the phase here as we get through training. Training's still going to be ongoing, but that training, the percentage of money spent is going to shift over into inference costs. And the only real question here is whether users will be willing to pay enough directly or not to justify the CapEx and OpEx. And that is the main question here. And I showed you this earlier, but must suggest that DeepSeek obviously has more Nvidia GPUs than claimed. 500,000 Hopper GPUs, not the 10,000 A100s they claim. And this is due to export controls. They're not supposed to have them. If you look at where the money's going into Nvidia, 15% of revenue is through Singapore. Now that 15% of revenue in Singapore is not building out data centers in Singapore. A lot of those are going to places like China where they're not supposed to get them. It's indirect. It's also important to note that Citi thinks that DeepSeek will benefit software stocks, and we own all these stocks: MongoDB, Snowflake, Elastic, Confluent. We've been talking about these for a long time. Palantir, Salesforce. And you look at ByteDance reporting to plan to invest $12 billion towards AI chips in 2025, $7 billion towards Nvidia GPUs. It's funny because I thought you only needed 3 paper clips and a handful of blueberries, but yet we still have, $19 billion right here at TikTok. And the Wall Street Journal came out this morning and said DeepSeek won't sink US AI titans. Extremely important here, AI inference versus training. So training is that first phase of an AI model, building out that LLM. It may involve a process of trial and error or a process of showing the model examples of the desired inputs and outputs, or both. Inference is the process that follows AI training. That's the next step. The better trained a model is, and the more fine-tuned it is, the better its inferences will be, although they are never guaranteed to be perfect. So training and inference can be thought as the difference between learning and putting what you learn into practice. The high cost of inferencing. Artificial neurons in a deep learning model are inspired by neurons in the brain, but they're nowhere nearly as efficient. Training just one generative model can cost millions of dollars of computer processing time. But as expensive as training an AI model can be, it's dwarfed by the expense of inferencing. I've seen reports out there that 100x is the number between training and inference. Each time someone runs an AI model on their computer or on your mobile phone at the edge, there's a cost in kilowatt hours, dollars, and carbon emissions. Because up to 90% of an AI's model life is spent in inference mode, the bulk of its AI carbon footprint is also there, and the expense. Inference is the meat and potatoes of any AI program. A model's ability to recognize patterns in a data set and infer accurate conclusions and predictions is at the heart of the value of AI. So that is, for example, AI models that can accurately read X-rays in seconds or spot fraud. So when you think of hardware requirements for AI inference, you're going to have GPUs and CPUs, but also those ASICs, ASICs we've been talking about. So these are the companies that will benefit from GPUs and AI accelerators, such as Nvidia, AMD, Intel, and others. It's also important to note that Nvidia has that software ecosystem, and it's going to help make things more effective and efficient. And companies like Snowflake and Databricks can make the inference costs of, say, Meta Llama LLMs up to 75% less on Cortex AI. We've been talking about how Snowflake is going to be a beneficiary of AI, and that story is starting to come to fruition. Now, last week on the channel, I talked about the data center value chain. These companies are still going to be the winners. It's important to note that ASICs, ASIC, these hyperscalers, this is when we start dealing with inference. So companies like Broadcom and Marvell Technologies are going to be huge players right here. Now, you can make an argument that data centers don't have to be as large, that they're more efficient, and that could impact things like networking, maybe the amount of GPUs, maybe even the amount of the ASICs chips. But when you think about the sell-off that we had on Monday, stocks like Marvell and Broadcom, it make a little bit less sense, other than the fact that they were just really expensive. And all these stocks have ripped, over the last couple of years. And frankly, having some sort of 10%, 15% correction on these names, it's really healthy. Now, it's important with things like edge inference. Companies like Nvidia will be big players, but there are a ton of others. Apple and Qualcomm and a bunch of names you've probably never heard of. You also have newer companies that are inference focused. Recogni, Furiosa, Testorant, Grok. There are several names in this category. So this is a very hyper evolving space. And anytime you invest in technology, there's going to be disruption. We've talked about a cycle that it's going to happen at some point. I don't think we're quite there yet. Nvidia is focusing on faster, more accurate AI inference. There's still going to be a player. And as AI is adopted, there's going to be more usage. And there's still going to be a significant demand for hardware. You could argue even more. But the software is also going to play a critical role in that. Just to give you an example here, this is one, and there are several out there that are even higher than this. This is the global AI inference server market, 18.4% compound annual growth rate. I've also seen stats like 26 compound annual growth rate by 2030, $70 billion. And you see stats like 90% of AI operational costs are going to be inference. So this is going to be the backbone of real-time AI deployment where we actually start using it. Now, many of the Wall Street analysts have come out, and overall, it's been very positive. Most of the price targets remain the same, $175, even $200. But we did see Morgan Stanley reduce the price target, I think, from $165 to $152 this morning. Most of this is still going to be positive for stocks like Nvidia, Broadcom, Marvell, Arista Networks, and so on. Citi, while DeepSeek's achievement could be groundbreaking, we question the notion that its feats were done without the use of advanced GPUs and fine-tune and build. Bernstein, in short, we believe that DeepSeek did not build OpenAI for $5 million. The models look fantastic, but we don't think they're miracles. The resulting Twitterverse panic, X-panic, over the weekend sees it overblown. And we just talked about this on Saturday in a masterclass breakout session, how social media can be very, very dangerous. There's lots of herd mentality. When something like this comes out, lots of stories start evolving very quickly. Most of the people talking about it really have no idea what they're talking about. We mentioned earlier Jevons paradox. Nadella's talking about it here. It strikes again. As AI gets more efficient and accessible, we'll see its use skyrocket, turning it into a commodity we can't get enough of. The LLMs are definitely the commodity. The use cases that these mega cap tech companies can put AI into use for, that's where the money is going to be, and really on enterprise, which we've told you time and time again. And you can see today we're seeing a nice bounce back on the NASDAQ, 1.8%. Nvidia's back up 7% from yesterday's close. Now, stocks like Broadcom aren't up nearly as much, only 1%, but this is up 67% in the past year, and it's hovering right at $1 trillion market cap. Obviously the TTM here, PE ratio, 12 months trailing, 158, but these stocks are not cheap even after the sell-off yesterday. So what are my final thoughts on Nvidia stock itself, and where is the stock headed next? I'm going to give you that commentary as well as a chart. Before I do that, if you're new here, make sure you smash that subscribe button and that bell so you don't miss the next video. And if this was helpful, compiling all this data in one central repository for you to consume, return me the favor, drop me a like and drop me a comment. Let me know what you think. So this morning I told you guys in Discord, I also posted on X, that Nvidia stock was basically hovering right around this S3 Fibonacci. So we're below the 200-day, that S3 Fibonacci 116.22. Of course, the stock has had buyers come in since then, but I said that this is actually a healthy correction pullback. Everything will be headline data dependent from here. I'm optimistic that Nvidia will see new highs in 2025, but I can't predict the data, the headlines, the earnings in the future. I believe the selling was overdone on Monday, and the situation was really just misunderstood by most. I told you I believe that China is misleading us on the price of DeepSeek. Even if they aren't, I still argue that it accelerates AI adoption, and even more inference is required, benefiting names like Nvidia, Broadcom, Marvell Technology, and more. Make your own decisions with your money. I've been in these stocks for a long time. I'm very green. I'm house shares on these names. They're still not cheap even after the sell-off. Am I bullish as a long-term investor? The answer is absolutely yes. And you can see this sharp snapback here from this S3 Fibonacci up past that 200-day moving average in the purple. I don't think that this is going to necessarily just be done overnight. I think there could be more volatility in the stock. And I even told the gang in Discord yesterday, I did a live stream before the market opened. I said, I won't be surprised if Nvidia is $100 a share again. I mean, just back in August, the stock was $90.69. So even if you look at it today at 126, I mean, this stock is up $36 since summer. I believe the earnings are going to come in good, and more than likely guidance as well. The problem with that is you can make a bear thesis and say, well, yeah, earnings are lagging, and the problem is the market's forward looking and all this demand is going to fall off a cliff. And so you're really going to have a lot of push-pull dynamics. You're going to have a polarizing stock, bears versus bulls. It'll probably linger on for a couple quarters. I still believe that you can see 165 to 175 and new all-time highs on Nvidia in 2025. Thanks for watching, guys. I appreciate your time and attention. Make sure you subscribe, drop a like, drop a comment. Have a great rest of your day. Take care.